Thursday, May 2nd, market analysis, standard like good morning, about 10:12 California time. Now, I will be a speaker next week on Thursday, May 9th at the San Francisco Airport Marriott, or this is actually the Money Show at the Hyatt Regency at the San Francisco Airport. And my topic is cyclical analysis and how it applies to automated trading. Now, I know I haven't done too much cyclical analysis lately on the market analysis show, but I'll show you some stuff at the end of the show with the E-mini and the October lows, which have been working extremely well for over 3 decades. Okay, I start out with overall market analysis, stock indexes. Here's the E-mini daily data chart. And you can see that we just barely made a little bit lower low today early. And momentarily, we are coming back up again somewhat. I do not expect to see any new highs soon. And that would be above yesterday's high and or this week's highs. I do expect to see today's lows broken and closed below this support area here, around 5,021 down to about 5,000 for the E-mini, to be tested and broken. When we go below it on a closing basis, we're going to be challenging the low for the last couple of months, which was last on April 19th. That, I think, is our last significant low that we're going to break and drop down finally, in my opinion, to about 4,900, a little bit below that, to 4,800, 4,800. And that area is, I think, going to produce the last final significant low until we see the beginning of the next major bull move up to make new historical highs, probably into August, September. And then the October lows will cause, I think, another correction, but back down to a lot higher than we are right now. And let's look at the next chart, would be the 1 minute, actually 5 minute on the E-mini. So we have a little pop coming right now in progress. Even if it gets above the earlier high today, I really don't expect that sharp rally high yesterday, apparently caused by the Fed saying they're not going to change rates and maybe giving some sort of implication that they are going to do so down the line. But what does that mean? How far is down the line? I don't know what they said. I don't care. The marketplace initially took it friendly, pretty good rally, but it gave it all away by the end of the day and actually closed below where it began that little rally. So that's not usually good news. Looking for lower lows. Let's look at the spider. Essentially the same thing, the father index, the SPY, ETF, getting close to the high of the day, closer to where it opened, a little on the upside. An old gap was closed on Tuesday, came down a little bit more yesterday, Wednesday, and today we're coming back to the middle of the range of yesterday. Again, this doesn't mean too much to me. I'm looking for new lows. Now, the SPY 5 minute, not going to give you too much more insight, in my opinion. Right now, twiddling around a little bit of a resistance area. Since we were above it and below it and above it and below it and so on, it's not super important now. The last one that was really great was this red zone up here, and the blue line, which is pretty accurate, stopped that sharp rally on yesterday's interest rate expectation announcement. Next chart is QQQ. Almost exactly the same low, a little bit of a rally, but frankly, not even coming back up again quite as well as these SPY. And the 5 minute Qs just show you more detail, obviously, and looking back over a much greater period of time. The big resistance area, of course, is that red zone, which this week did stop the rally. Fine, that's exactly what you would expect. So after bobbling around a little bit here, and maybe tomorrow being a Friday, we're going to see new lows, very possibly, at least for the week. Next, we've got the NASDAQ futures contract. And the same commentary goes for this, of course, but there's a little bit different chart patterns because the NASDAQ and the E-minis and the micro E-minis trade many, many more hours per day than the old ETF stock indexes, DIA, QQQ, and the SPY. They have a much shorter, about a third of the trading time frame per 24 hours than the electronic versions. That's the way things are going in the last couple decades. Next, NASDAQ, 5 minute. Yep, minor new low and a little bit of a downside spike during a 5 minute period. And it's trying to come back. But I do have to point out, I almost always have my custom relative strength index on the bottom, the subgraph. And anytime this market gets up above 75, I start to get very nervous about rallies, even if they're extremely short term. So it's a tool that I use all the time, especially and as a necessity for my overall major signals, the ER daily data chart signals, which turn prices red or green if there is a sell signal for red and a buy signal for green. And you've seen many of those. Sometimes, and not that rarely, the exact high day of a big swing like that one, and the bottom of a market like a very good rally on that green. It doesn't happen every time. I wish it did. Kind of hard to create an indicator that tells you at the top of the market and bottom of the market is happening as it is happening on that day. Next chart is again the Russell 2000 1 minute chart and 5 minute. And we're high and last for today, but it really doesn't boil down to much. We have to close above these two rally highs in the last 3 days in order to get something friendly going here, a little bit more of a rally. Next chart is the Dow futures. And I do love to point out that I got a sell signal smack dab on the exact high day on April 1st. April Fools. And the green line is the equity or trade line, and that's where we got short at that price. And that's where we got out at that price. And sure enough, it is also in this particular situation, a bullish engulfing ER buy signal. That's fantastic. My signals pulled 100% daily data out of this last big down move. And we picked up 3 days worth of rally on the buy signal. Now we're flat, waiting for new signals. Sideways trading range, doing a lot of nothing, frankly, in most of the indexes for the moment. And here's the 5 minute data also, just fiddling around. And by the way, here is the 5 minute data with that strategy running in much greater detail than the daily chart. You can see that's where our new long got long at that price. It didn't make much money, and it only lasted 3 days, but it was green money, profit. And in the short position, from the top of the market right there where the data turns red, we got short for the one scalp, made a little money on the day trade, and the one overnight stayed with the trade for looks like about 3 weeks, maybe even 4, all the way down to here. So no complaints about the signals lately on the DIA. Next chart. We got bonds. Bonds are about unchanged, down 4 ticks, near the high of the day. I think interest rate futures are slowly bottoming out. I will do my best to pinpoint a day which is profoundly important for the beginning of a big move, and it'll probably be up, not down. And I think it could be this month. It's only the 2nd of May. I doubt that it's going to be in next month, June, but maybe early June. So 10-year notes, same comment. Same downward slanting channel, same test of the support line under the channel. I like what I see. I've been talking about interest rates, and they've been doing approximately what I've been predicting for many months now. Hopefully, I'm going to continue the running streak, and maybe a minor new low. I can accept the fact that it might slip off on 10-year notes to maybe 6 something, but not below 6, and it may take a week or 3. but I'm basically looking for major buy signals to begin another huge move up. Next chart is crude oil. Crude oil has broken out yesterday officially of a head and shoulder top formation. First day of the breakout, and the breakout price took place at 81, call it 81.04 maybe, and it closed at 79. What is it? About 79.4. Way down. New lows since March 14th. Top formation looks good. Timing looks good. Shoulders look good. It includes a little double top for the head. That's very nice. Interesting. Didn't necessarily have to do that, but that's what we got. It's even better. Too bad the second or first or both weren't bearish engulfing signals for me, and I didn't get anything in here. But you know, they don't always happen at tops and bottoms. Now, the minimum downside objective is 74.25. Crude. Next, we've got natural gas. Still inside this downward sliding wedge. Some people might call it a pennant, but it's got a slant to it for both the bottom and top. So more often we call it a wedge instead of a pennant, which has an upward slanted bottom and a downward slanted top, kind of like a pennant. So waiting for a breakout, then I can say something more definitive. Otherwise, it's just getting trapped in a tighter and tighter range, which will not last much longer. These patterns usually break out to the upside, so watch for a close above the bear trend line across the top of the wedge. Next, we've got very big divergences lately, and I talked about that before this bear move started. Yesterday, gold gapped down a little bit, and now we've come back up to close the gap, so that's done. Remember, I keep saying gaps are like black holes in space. The market tends to go back and close the gap, get sucked back into the gap, which today it did. Now what? Well, I don't see any trend change. We were extremely overbought, and that was at 94. Wow, that's almost unheard of. Sometimes we don't even see that for a full year or multiple years on any particular instrument or contract or symbol. So that's how rare it is. Even with my custom RSI, let alone Wells Waller's older version, which I learned RSI from Wells himself. Now, looking for lower levels, gold, looking for 2202, downside test of a modest amount of support, and maybe even a little lower than that. Next, silver. Today, we have an outside up day, assuming everything's correct with the data. Sometimes we've had a little problem with that. I'll have this corrected. Well, let's see what we can do. Control. So I've just started the reload on Ninja, and it will take a little bit of time because there's 1,000 days of data loaded here. I like to go back a few years to see formations and support and resistance zones and things like that. And I'm going to give it another 30 seconds or so. Sorry, but I want to make sure that I've got this green price bar legitimate, because this is, if I'm correct, a bullish engulfing at a support area, and the chart will change like it just did right now. And there goes my bullish engulfing. I'm sorry, it's not there. I don't have it. Cancel a bullish engulfing comment. What we do have is a test of support. In a few seconds, the strategy will change colors of the bars and the bodies to my white and yellow, mostly with red and green signals on the important days. Just a few more seconds. I'm sorry, no bullish and bearish engulfing. Ninja's in the process of getting this problem fixed. They shouldn't be showing, in my opinion, chart patterns that are not legit. We're still calculating, as you can see here, the strategy. And here it comes, marching along, changing bars to red and green as we see these sell signals and sell signals develop. And there's no buy signal. So that's done. Next is the platinum. No signal, no problem. Resistance could be stopping this rally. Will not be surprised. We're not in overbought condition. So I like that when we're in resistance, but it doesn't mean the prices are not going to stop rallying. Resistance is supposed to stop them from rallying. And I have to say, so far, I think that's about to happen. We're below where it opened. The high is a higher high in resistance, and it could easily start to drop down from here. Let's watch closely. High-grade copper. That's a legitimate sell signal on the damn top of the market in copper 2 days ago. The first support area we've already gotten down close to, but not quite at 4,440, 448. I like what I see. It's working just great. That was a Tuesday sell signal. Woulda, coulda, shoulda got short on Tuesday. ER1 did for both the position trade and the scalp automatically, 100% automatic strategy. We are probably still on the short ER1. I can turn that on for tomorrow's market analysis YouTube and show you what it's doing. Looking good. What can I say? I am looking for at least a little bit of a more move to the downside, but that's really a very small move. I'm frankly looking for something more like, wow, down to about 4.026. Yeah, really down to there. Did I say 4,000? Didn't mean to do that. 4 point. Bearish, quite bearish. Soybeans, oil, meal, corn, and wheat. If you haven't been following me, my system has caught 4 out of 5 of these symbols, all grains, at the bottoms to the exact day. Soybeans is one of them. It's the second low in a double bottom formation in a support area. Wow. Today, great. We are making new highs since the buy signal, survived a correction, no lower low, and looking good, very good. Now, this could be a very, very important long-term bottom. I can't tell yet. We need to start closing, frankly, above 1240. Once that happens, if that happens, then I'm going to start screaming bloody murder. This thing could come all the way back up to maybe 1420. Way up there. It was up there last November, and it was up there many, many times for the last couple of years. There's no particular reason I could think of why it wouldn't do it again. This is simply a gigantic, big sideways range where we have a couple of moves down to a brand new support area that has proven to be good support just a couple of weeks ago with my signal. I love it so far. Good trade so far. Almost guaranteed that you can't lose. Well, I shouldn't be saying that, but used to have a commodity broker's license, stockbroker's license, hedge fund manager's license, and some others. President of a forex trading firm, blah, blah, blah. Next chart. We've got soybean oil. We did have a bullish engulfing at the bottom of that break, but now we've seen new lows, and it could be a very large 2-year head and shoulder bottom. Now, there's a couple of problems with this. One problem is the head and shoulder bottom formations typically are formed at the bottom of a bear move. This is essentially at the end of a bull move that started to go sideways and develop the pattern. Not unheard of, but fairly rare. Secondly, it's so big, it's very unusual to see one 2 years in size. The first shoulder was July of 22. That's almost 2 full years from shoulder to shoulder. Otherwise, all the body parts are there. It looks legitimate. And if you were to hide the move up or down sideways before the formation started, you would never know that it wasn't the bottom of a bear move or something else, which it, sideways moved before that. Okay, I'm trying to turn and trying to justify the last couple of days being the low of a 2-year bottom formation, except of course for the head. And during that time, we got a green bullish engulfing formation. Just want to point that out. Another interesting point is we actually did have a very small, I'll put the line in right there, head and shoulder bottom, smack dab on the first shoulder low, and that formation worked great. Breakout, 2-day rally, all the way down to the next neckline, and that probably somewhere in these highs is the upside objective. Just eyeballing this. I've seen thousands of these formations, everything from creating it in a matter of, well, 5-10 minutes to multi-year. Again, most of them are a few months, several months. Next formation chart, meal, big support, great support. Got that low back there, profound low, October 7th of 22. And recently we have the exact low of the bear move on March 1st. On March 1st, and it is so far the bottom. Soybean meal has started to rally strongly and now is starting to get overbought. So I'm not going to be surprised if we have a minor downside correction, probably to 340, and we're currently 364. We could go up a little bit more first and then have the correction still down to 340, but we'll see. Bullish, working great, no problem with this. Caught it the day it turned, and you know it. Go back to my recording on that green day, please. Next, also in corn, caught the exact low day. Do the same thing. Go back to my recording on, I think it was February 26th. Pretty sure, yep, February 20th, and see what I had to say. And even a day or 2 or 3 before that, if you like. New highs almost, and I think it just made it the last couple of minutes. I think we have new highs here since that bullish engulfing buy signal at the low day, and it matches the exact same bullish engulfing ER buy signal and oversold conditions, custom ER, a custom version of the bullish engulfing, also a custom version of RSI. Both of them are pretty similar to the old-fashioned version, but they're adjusted for, you know, time and speed of which the markets are moving these days relative to the way they moved before. Love it. Looking great. Wheat. We got the bottom of the market to the day. Let me pull this over a little bit. Good. And we got the buy signal the previous day. Didn't work quite exactly correctly, but I'm so happy we got another one the next day, which so far totally survived. Look at new highs late last week, it looks like the end of last week. And this sell signal yesterday, I told you yesterday, I didn't like it the way it was performing. I didn't like where it was. I didn't like the conditions it was in, but you can't fight a system. You're supposed to follow the signals. Okay, let's assume we did. Let's take a short at the worst possible place, and I know that's not true. So the likely spot is that we shorted it right around 595.5, and we would have absolutely gotten stopped out at the worst level at 609, but highly likely that the stop was coming down more during yesterday and even this morning before the market popped into new high ground. We know it didn't open in new highs because this is the current quote in the bottom of the body is at below yesterday's low of the body. So we know it opened down here and then made a dip down, which probably pulled the stop down. Anyway, we're out. I don't like the signal. I don't think it's going to work. It didn't. I'm looking for a rally now, and I'm looking for new highs for the trend. Next, cattle. Like what I see? I'm not going to make a comment. I can't come to a conclusion. Cattle, I'm going to wait until something definitive comes in mind here or some signals. And hogs, wow. Downside breakout on a head and shoulder top yesterday. Follow through more today and finally getting a little bit oversold this morning. We got an ER sell signal on the exact high day. And that was the head of the formation. Nothing wrong with this whatsoever. The timing is a little off. The first shoulder was a little sooner than you would expect, or you could say, and you should say, the last shoulder was a little sooner than you would expect, because this is a measurement from the shoulder high to the head. And then you measure that same amount of time from the head to the right. And this was definitely maybe half the time, 2/3, something like that. So it was earlier than you would normally expect it, but the body part is there. The neckline was drawn. When you broke it, you had a big downside breakout yesterday. No problem. Looking good. And I will end the market analysis comments for the day. Thank you very much, Stan Ehrlich. Have a great trading day.